Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is March 19th, 2016, coming at you with another live Google Hangout. The market, it sold off again today, and once again, we got the Ramp Capital crowd. They are driving prices right back up to break even. You take a look at the S&P here. What I've done is I've put the Bollinger Bands on the outside of price here using two standard deviations and the 20-day moving average as the middle band. We've seen this the last few days here where price gets close to, or actually gets onto the lower band, and it pops every time. We saw this again back, what was it, Friday, May 6th. We saw the pop that led to a 3-day bounce. So I'm getting a little bit weary here because even though right now the S&P is trading just a shade below this 2039 level, which would confirm the head and shoulders pattern. If I zoom out enough, you can see it. This is the head and shoulders pattern. You get your left shoulder followed by your head, and then you got the right shoulder here. So below 23.9, it confirms. We're at 2038.79 and climbing. So I don't have a lot of confidence that we're even going to be above 2039 by the close here. So what happens now is that we're setting up for a potential bounce next week. I mean, this is a hard bounce. We were all the way down to the 2020s this morning, as low as 2025, and now we're at 23.9. So we've bounced 14 points off the lows, and we're only down a little over 8 points on the day now. So that's quite a recovery here, and it should be concerning if you're a bear, because we're at 2039 right now, which doesn't confirm anything. And the favors and the bulls at this point for a possible bounce next week. Now, does that mean that you start liquidating all of your positions or all your short positions and you start covering? No, you got to take it a little bit at a time. You really need to be taking profits like along the way. For instance, yesterday, right, we had the FOMC minutes come out. The market sells off hard. For instance, Google, I was short on Google. I got into it on the 17th, which was 2 days ago. Nice candle here that it sold off on. So I was up about 1% on the trade, down almost 2% on the trade, or up about 2% on the stock, dropping about the opposite. And then it bounces yesterday. And so at the close of the day, or towards the close of the day, I was up about 1.1%. I went ahead and covered it at 721.01. Not because I didn't think that the market couldn't go lower today. I was still positioned to the short side. However, I needed to be able to book gains along the way so that we're consistently making profits throughout the weeks and throughout the months and everything else, that I'm not holding a whole litany of shorts, and then all of a sudden the market wants to gap up 30 points one day out of the clear blue because some Fed chairman in some country in some random state of mind decides to say something that some algo that's connected to some bank that is has some trader sitting behind it decides to push a button and buy all the stocks that he possibly can and send the markets flying up. All right, I know that's a little bit of an exaggeration, but seriously though, you have to take profits along the way, because anything can happen the next day. And if you aren't careful, then all of a sudden you get caught with your pants down, and you realize, okay, 2 weeks worth of profits and I don't have anything to show for it. So along the way, I'm taking profits to make sure that I've got something to show for the work and the effort that's being put into the stock market. And today I did that again. SPXU. I was hoping for, and you can hope for things, but you can't hinge your hopes on your decisions. So yeah, I was hoping for a 30 to 40 point sell-off today, and I thought we might actually get it on the S&P today, but we didn't get it at all. So let me pull up the SPY here real quick and let you see what I'm looking at here on the, let's go 5 minute chart here. You can see here, and for right now, let's get these Bollinger Bands off. I don't think I really need them right now. You can see we had an inverted inverse head and shoulders pattern that was forming. It formed, and then it pulled back a little bit. And this is what I was wanting to see. Okay, are we going to fail with the resistance right here at about 204, or are we going to pop higher? So we started selling off and thinking, okay, there might be a legitimate chance we can get back below 203. But that didn't happen. All of a sudden we started popping. That's when I got out, because at that point it's making a new leg higher, and I'm not going to be party to that. So I got out of SPXU, which, at 29.48 or so, and took my gains with me. I made about 4.2% on that trade. I bought it on the 13th, last Friday, at 28.30, and got out of it today at 29.48. And this is a 3xer, and I held it for over a week, and for better or for worse, the fact is the ETF only moved 4% there, which you would kind of expect a little bit more since it's a 3-to-1 leverage. But that's been the case a lot with these leverage ETFs, and it's not because there's something wrong with the actual leverage ETF itself, but because the market just really isn't moving. You see, we're in this range right now of 2040 to 2138, which is the all-time highs. And it is just an absolute mess in this price range. That's why I want us to break down. And that's why I want us to get down there, because if we can break down, we can drop a little bit further. It gives you the better chance to have another rally like what we saw in February and March, where it goes way back up, because there's not a lot of problems below 2040, but between 2040 and 2138, it's just a choppy, convoluted mess that quite frankly, I'd like to get us out of. If we want to break through 2138, that's great, but we're closer to 2040 right now, so I'd like to take the easier path lower. And the charts are supporting the move lower. The problem is that you got the bulls that are constantly buying up the market each day, and there's really nothing that you can do about that. It's not like you could say, well, I'm just going to hold my positions long, because all you're going to do is drop a lot in the morning and just not be down as much as you were in the morning by the end of the day. But that's going to keep happening every day, to where eventually you're going to get stopped out of your positions, and you don't want to be in that situation either. So it's a tough market, but I mean, I think that me and the members of the SharePointer Splash Zone, we're trading it pretty well. We're doing a pretty good job with it, and I'm pretty pumped about the direction that we're taking going forward. The best way that I can think of to describe my approach to this market and the trading is from a couple of movies. I'll go through 3 different generations here, starting with Butch Cassidy and the Sundance Kid. If you remember Paul Newman, when one of the cowboys said to him, he's like, you know what, Butch, that's what you're good at thinking. And he says, boy, I've got vision while the rest of the world wears bifocals. So that's one thing I'm trying to do, is I'm trying to have the vision, to know when to take the gains, to take the profits, and to manage the risk, while everybody else is waiting for this big home run to the upside or to the downside. I'm going to just keep taking profits along the way and securing those profits. Or if you want to look at my generation, Rocky 3, you have Rocky Balboa versus Clubber Lang. You got the second fight, and he learned from his first fight that you just can't take these haymakers and try to knock out Clubber Lang, that he's going to beat you up pretty good if you do that. Instead, he was waiting for Clubber Lang to tire himself out, and he would hit him with another punch, and then he would let Clubber Lang throw a couple of big haymakers, and he'd come back in with another jab and another jab and another jab. And eventually, Clubber Lang tired himself out, and he won, and Rocky won. Or if you look at the current generation of movies, and you look at like the Hunger Games, and you the character that Philip Seymour plays, and I can't remember it exactly, but he talks about moves and counter moves, and that's what we're doing. We're watching the moves of the market, and we're doing counter moves by the market, and we're doing counter moves to it. And that's what I'm really trying to do here. So you look at the last 10 trades that I have: GM 1%, Apple 0.3%, LinkedIn 3%, SPXU 1.5%, IWM 0.2%, SPXU 4.2%, MasterCard 1.3%, Google 1%. Then you have Oracle with almost 2%. So you got a lot of trades and not a lot of big gains, but they're gains that add up to something special there. And the market's down for the month. We are up, and that's really my thoughts right now on this whole thing. I was going to get into a lot of different trades, but I wanted to be able to focus on this market here, as we only got about 15 minutes left before the market sells or closes for the day. So if you have any questions, feel free to contact me, Ryan, at SharePlanner.com. I'd love to have you in the SharePlanner Splash Zone. You can check it out by going to SharePlanner.com, www.SharePlanner.com/Splash Zone. So do that little / button and then type in Splash Zone, and check out my service. I'm in the chat room every day. I provide my swing trade alerts in the chat room, but I also provide them via text and email, and that's included for international customers as well. So yeah, if you have any questions, feel free to hit me up, or just jump right into the Splash Zone and try it out for a free 7-day trial period. All right, folks, you guys have a great day, and God bless.